What's up, guys? It's Mark Sedlock with Trade by the Numbers. I have a little bit of a treat for you guys today. It may be the most important lesson in trading psychology that you'll ever watch. For those of you who've been following me for a while, one thing you've heard me say, and maybe you didn't pick up on it, is as a trader, you have to get to a place where you are rigid with your rules but flexible with your expectations. And what that means really is you need to do your testing and understand the probabilities of what you're doing. And you don't want to speed through that process, because if you do, you're gonna end up bending rules during your testing, and you may not even be aware that you're doing it. And what happens is once you move into a live environment, then and the system isn't working the way that you intended, you don't have anything to lean back on, and you have to start over from scratch. So once you get to a place where you're completely 100% rigid with your rules, and they are testable and verifiable, then you have to manage your own expectations. And what I mean by that is this. Let's look at this period. This is my I'm calling it the signal period. This is how long I've been getting signals. And just so we are aware, guys, this is an index of the NASDAQ 100. So there's 100 stocks in the NASDAQ. This is an index of those 100 stocks. So if the index is going up, most of the stocks are going up. Not all of them, but the majority. If it's going down, most of the stocks are going down. And as you can see, I haven't had a trend during this period. I started here, we immediately went down, just V bottom and straight up with a few big swings in between. And then for the last 3 weeks, this is where we've been. And right now, my system is taking a drawdown. So this is a very important period for any trader. It's that inevitable drawdown. You can't avoid it. Don't even try. But what you have to do is you have to analyze your system, look at your equity curve, and see what period, or look at your drawdown periods and analyze how long they last and how deep they go. So in this signal period, which is right at 3 months, just over 3 months, the system is up about 26%. So it's about a 26% return over this period. Now let's put that into perspective. I know that a lot of you out there want to go out and get a system that's making you 100% return, 1,000% return. Guys, that's not realistic to expect. Can you do it? Absolutely. I've done it. I've hit triple-digit returns plenty of times. But should you expect it all the time? No. And here's the other piece. As your account gets bigger, it becomes more difficult to produce those triple-digit returns. Most money managers on Wall Street are not even hitting 15 to 20% returns. So if I can achieve a 20 to 30% return a year, and I can compound my money at 30% or even 20%, 10 years from now, I'm in a very great position. So you have to look at this as a longer term plan and not a short term plan. Now, what's the difference between me getting 20, 30% and a money manager on Wall Street getting that? Well, the difference is billions of dollars, right? They're managing billions of dollars, whereas I'm only managing tens of thousands of dollars. Okay, hopefully one day hundreds of thousands of dollars. So I can move in and out of the market very easily, whereas they can't. So if I had $1 billion, we'd be having a whole different conversation, right? We actually may not be having a conversation on YouTube at all. It'd be a whole different game, right? So let's walk through the analysis of this period. So at the peak, for this signal period, the system was at a 29% return. During this period here, the system has hit a 6% drawdown, taking me from a 29% return down to a 23% return. Okay, you following me? So that's a 6% drawdown. Now that doesn't sound big, but let's understand something. I am trading a very small amount of risk. I'm only risking 1/4% of the account per trade. Now, why am I risking so little? It has nothing to do with how much faith I have in the system, but it has to do with mitigating my risk. Because you see all these periods where there's gaps? Well, stocks do that too. So I can be in a position thinking I'm only risking $50, and the next morning it gaps below my stop, and instead of losing 50, I lose 150. So in order to offset that risk, I'm just reducing the amount of risk per trade. It allows me to sleep at night, which is important when you're trading a system. The system must fit your personality, otherwise you won't be able to follow the rules and trade it appropriately. Okay, so risking a very little amount is key for what I'm doing. The other piece of that is there are times that I get a lot of positions on, and I don't have a big enough account to be able to purchase the stock for all the positions. So again, by reducing my amount of risk per trade, I can have more positions, because I don't want to miss any trades. Okay, I hope that all of that makes sense. So something very interesting happened right up here. I ended up with about 10 positions on. They just kept accumulating. I had 8 shorts, meaning I wanted to go down, and 2 longs, meaning I want them to go up. And I kept thinking, man, if the system is calling for shorts in all of these stocks, surely we're going to have a move down. And look what happened on Friday, just yesterday. We had this big candle. So what happened here, I hit 5 targets on the short side. I got stopped out of my longs. And now, instead of being down 6%, I've made back half of it, and I made back 3%. So I'm down just 3% from my equity highs at this point. If we have any follow through, I have a handful of positions that are close to targets, meaning I am going to end up making new equity highs if we have follow through to the downside, which is great. So my point in this, guys, is this is a lesson in trading psychology, because you are blindly following the numbers. Okay, it's not about what you think or what you feel. It's about what the numbers are telling you to do. And if the probabilities are saying, here's the zone that I trade every time, and here's how I trade it every time, then when it sets up, you take the trade. Okay, you don't second guess it, you just take the trade. So what is the signal? Well, this is a great example, and of course I've cherry picked an example, all right? So, but this is what it is, all right? We have a high time frame chart, which is a chart here on the left. It's a 4-hour chart. And then we have a trading time frame chart, which is the chart on the right. It's a 1-hour chart. All I'm doing is I'm waiting for price to move into either a green zone or a red zone on my high time frame, and then I'm waiting for the market structure to align with this market structure on my high time frame. And once that happens, I get this zone. And then when I get this zone, I get an alert that says, hey, take the trade, dummy. And so I come in here and I take the trade. All right? And I'm risking 1 unit to make 5 units. So I'm risking $1 to make $5. Okay? And the higher probability trade for me to be, because if I'm risking 1 to make 5, I have to have a pretty good move, right? Let's see what that looks like here. So if I'm entering on this bar, here's my stop and here's my target. So I'd get filled here. Now, you can see my risk is just from here to here, and my target from here to here. So I need a decent move. In order for me to get that, I need to have the highest probability possible for that to happen. And that happens to be when this when this bar down here is green on my trading time frame. If it's green on my high time frame, even better. Then everything's aligning. But I at least need it to be green here. And this gives me a higher chance of hitting the bigger target. So I can just risk a little bit and try to make a lot. Make sense? Okay, great. All right, now what I want to show you, one more thing, and this is again is another great lesson in trading psychology. So now these are all the trades that I've taken in Forex since the system has been producing signals. And what's very important for you to see is I want you to follow the ebb and flow of the money coming in and going out of the system. So if we can sum these columns up quickly. I probably should have already had this done for you guys, but it won't take long, so just bear with me. We're going to sum these up. Okay, so my assumptions here, guys, I'm trading a $5,000 Forex account. Okay, I'm risking 1% of the account per trade. The reason I'm comfortable risking more in Forex is because I don't have all of that overnight gap risk. The only time I have gap risk in Forex is when the market closes on Friday and opens Sunday. That's the only time. I don't have them during the week. So I'm comfortable risking 1%, which is $50. So this is the return that the system has had over the past 3+ months. So if we look at this, take this divided by this, we're sitting at a 47% return. Phenomenal, right? But let's now dig into what you would have had to withstand to make the 47%. So in this period here, we made $200. In this period, we made $600. In this period, we made $12.50. So far, things are smooth sailing. But then all of a sudden, look at all these losses. So let's start with this loss, and we're going to sum up the losses starting here, and then continuing through here because we have more of them right there. Why did that? Oh, I guess it would help if I gave it the operator. Okay, so there was a $1,000 drawdown in here, guys. So if the account prior to the drawdown is, let's look at the let's look at the equity high. So $2,400 positive was the equity high. That would mean we have an account at $7,400. If we lost $1,000 and we're now at $6,400, we're going to have a drawdown of 13%, 14%. Okay? Now, if you had just started trading with $5,000 and you hit this streak of losers, then you've lost 20%. The 1,000 over 5,000 is 20%. So you would have been at a 20% drawdown. Ouch, right? Well, is it? Ouch. It's not. If you take the stance that you trust your system and you know the probabilities and you've tested everything and you've seen a 20% drawdown in your testing, then you know it's just part of the system. You see, guys, once you get to a point where you blindly follow the system, the market can't hurt you anymore. It has no strength over you or no power over you. And let's go through this now. So let's just say, and how many people out there, and be honest with yourself, how many people, if you hit this string right here of losses into this area, how many people would say, oh, the system sucks, I'm done trading it? Or you start thinking, I need to tweak it and add something to it. My guess is a lot of you. And look what would have happened if you did. You would have missed this string of winners over 3 days. This string here amounts to a $1,000 gain, which takes us back, well, let me get that, hold on. It was inflating my wins. All right, so it takes us from, well, we would have been at 1350 prior to this string. Bump up $1,000 brings us to 2350. Our prior equity high was 2400. So now we're $50 away from new equity highs. Well, $51 away. But if you were one of those people who said the system sucks and stopped trading it, and guess what? You're still either at your 13% drawdown, your 20% drawdown, whatever your equity was at the time before the drawdown, you can figure that out. Okay, and then the worst part about that, guys, is what that does psychologically. Because you start getting very hard on yourself and start calling yourself a bunch of bad names. Like, I'm an idiot. I always screw this up. That's the worst thing that can happen. All right? So you have to do your homework, guys. I've been building this for over 2 years. I'm so ready just to have this thing print money. I mean, I can't even tell you how ready I am. But I have to put the work in, because I know that once everything's finalized, this may honestly, obviously I'm biased, guys, but honestly it may end up being one of the most powerful systems out there available at the retail level. Okay, I'm not a hedge fund, but could this operate one? Hell yes, it could. All right, gang, that's it. I really wanted to get this video out a while back, but there's no better time, especially after the drawdown that this has been going through. And so my hope is that you guys see that this is just part of trading, no matter what you're doing. And I know there's a handful of you building your own systems. Don't give up on it, guys. There's light at the end of the tunnel, but you have to put the work in, and you have to make sure that you're doing it objectively. That's all I got. Hope you all have a great rest of your weekend.